Hello, I am T. Barry. Before we start, disclaimer. This is not financial advice. I am not a licensed financial advisor. Always do your own research and consult with professionals before making any investment decisions. Investing in stock market can be risky, and you should only invest what you're willing to lose. As of October 2024, the United Arab Emirates has been recognized as the world's most economically stable country, topping a list of 89 nations in the latest rankings by U.S. News and World Report. This recognition is attributed to the UAE's low manufacturing costs, favorable tax environment, minimal bureaucracy, absence of corruption, and transparency in government practices. Thanks for subscribing and liking the video. I appreciate you. Other countries frequently noted for their economic stability include Germany, Canada, and Japan, each demonstrating strong financial systems, sustainable growth, and high living standards. It's important to note that economic stability assessments can vary based on the criteria and methodologies used by different organizations. Factors such as GDP growth, inflation rates, employment levels, and political stability are commonly considered in these evaluations. If the United States economy were to experience a significant downturn, certain countries would be less affected based on factors like economic independence, trade reliance, and diversification. Here are a few insights on how some of the most economically stable countries could fare. Firstly, the United Arab Emirates. The UAE's economy relies heavily on oil exports, tourism, and real estate. Although it maintains strong trade relations with the U.S., its primary trade and investment partners are in Asia and Europe. The UAE's diversification efforts, especially in sectors like tourism, finance, and technology, might help buffer against a U.S. economic downturn. Investing in the United Arab Emirates, UAE, and Switzerland offers diverse opportunities due to their robust economies and investor-friendly environments. Here's a guide to help you navigate investment options in both countries. Does Vanguard have an ETF that invests in the UAE? Well, Vanguard does not offer an ETF specifically focused on the United Arab Emirates, UAE. However, the iShares MSCI UAE ETF, ticker symbol UAE, provides targeted exposure to UAE equities. For broader international exposure, Vanguard offers the Vanguard Total International Stock ETF, ticker symbol VEXUS, which includes investments in both developed and emerging markets outside the U.S. While VEXUS encompasses a wide range of countries, its specific allocation to UAE equities is minimal. VGK by Vanguard identifies the countries and percentage. The Vanguard FTSE Europe ETF VGK offers exposure to a broad range of European equities. What has been its return over the last 7 years? Over the past 7 years, the Vanguard FTSE Europe ETF VGK has delivered the following annual total returns: 26.98%, 49.1%, 24.85%, 5.45%, 6.88%, 6.01%, 20.21%, These figures represent the fund's performance from 2017 through 2023. Warren Buffett, at a Berkshire Hathaway annual meeting, said, "Good morning, everyone. Today, I want to talk about a fantastic tool for the average investor, ETFs, or exchange-traded funds. Many of you know that I've always been a proponent of passive investing, and ETFs fit perfectly into this philosophy. The beauty of ETFs lies in their simplicity and efficiency. They allow investors to buy a broad basket of stocks or bonds at a low cost. For most investors, trying to pick individual stocks is a losing game, but by investing in a broad market ETF, you're essentially betting on the entire economy, which over time tends to grow. One example I often cite is the S&P 500 ETF. It's a wonderful way for the average person to participate in the growth of America's biggest and best companies. You buy it, you hold it forever, and over the decades, the results are likely to be quite satisfactory. I've advised in my will that 90% of the money I leave for my wife be invested in a low-cost S&P 500 index fund. It's the safest and most sensible way to achieve long-term growth. And remember, the costs really matter in investments. The lower the costs of your investments, the higher your returns. So, if you're looking to invest, consider ETFs. They're a tool that can help you avoid the pitfalls of trying to outguess the market. Remember, the goal isn't to pick the best stock or timing the market. It's to own a cross-section of businesses that in aggregate are bound to do well. What has been the S&P 500 percentage of return from 2017 to 2023? The S&P 500 index has experienced the following annual total returns from 2017 through 2023. The S&P 500 index has experienced the following annual total returns from 2017 through 2023. 21.83% loss, 4.38%, 31.49%, 18.40%, 28.71% loss, 18.11%, 26.29%. What is its percentage during 2024? As of November 12, 2024, the S&P 500 index has achieved a year-to-date total return of 26.93%, which includes both price appreciation and dividends. What was the worst year for the S&P 500 index, and what was it? The worst year for the S&P 500 index was in 2008 during the global financial crisis. The S&P 500 index began to recover relatively quickly after the 2008 financial crisis, though it took some time to fully regain its pre-crisis levels. Here's a look at the timeline and key factors involved in the recovery. The S&P 500 index began to recover relatively quickly after the 2008 financial crisis, though it took some time to fully regain its pre-crisis levels. Here's a look at the timeline and key factors involved in the recovery. The S&P 500 hit its lowest point of the crisis at around 676 points. From this low, the S&P 500 rose nearly by the end of the year, buoyed by government interventions and fiscal stimulus programs. The index continued to climb with a total annual return of around D as economic confidence began to slowly return. By early D, the S&P 500 surpassed its October 2007 high of around 1,565 points, marking a full recovery after approximately 5.5 years. After reclaiming its pre-crisis highs, the S&P 500 continued its upward trajectory, experiencing annual returns of and maintaining steady growth with occasional volatility up to 2020. The 2008 crisis recovery demonstrated the resilience of the S&P 500, supported by central bank actions, fiscal policies, and investor confidence, ultimately leading to one of the longest bull markets in history. Thanks for subscribing and liking the video. I appreciate you.